to this Stockbox interview. Hello and welcome to the Research Talks here on Stockbox with Alan Green. Alan, how are you doing? It's been a slightly quieter week from my point of view. How about you?
It's been a quiet week in some ways, but it's been good in other ways because I've been able to get some essential admin done, should we say, Mark? But good to be here. And I think this is a celebratory week for us, isn't it?
It is. Yes, it is a celebratory week. This is Research Talks number 52. So there we are. We've covered a year, 52 weeks. Which is unbelievable, really, isn't it?
It's certainly been an eventful year, I think, for everyone, hasn't it? But certainly in the way the markets have evolved, I don't think any of us could have foreseen, when we first started working on this, just how the markets how so many sectors of the market would explode into life and deliver great value to investors. Who probably, given the backdrop, weren't expecting it, to be honest. But markets work in strange ways.
They do. No, it's certainly been an interesting 18 months and a bit of a respite at the minute. But I'm sure we're back in the autumn as usual. But you're right, good time to get that admin that always lingers in the background, and you never really get a chance to get on top of it. It's always there. I'm sure everyone has the same thing. So it is a good time to take stock and just get your admin out the way and just rethink things a little bit. So today you're going to be talking about MetalNRG and Corcel PLC as well, two very similar companies. So which one do you want to start with, Alan?
Well, let's start with MetalNRG. MNRG, of course, is the EPIC code. And yes, as you say, Mark, these two companies share similarities in that they I think, are straddling a broad range of assets, both in energy. With MetalNRG, you've got assets in oil production, both in the UK. There's not onshore oil production in the UK, and of course green energy, a joint venture. Well, the first joint venture is now underway with Ectech in Italy, and this is of course on a waste to energy plant. At the same time, the company also has a gold project in Arizona, which of course it's underpinning. I think the value, and I think it's I think, just as we say to investors, it's always good to have a bit of gold in your portfolio. I think MetalNRG have, if you like, insured their offering by having this gold project sitting underneath everything. So into if you go to the company website, the company describes itself as creating shareholder value through two divisions, a direct investment division and an indirect investment. And I'm not going to dwell too much on the indirect investments because those are very much dormant investments at present. But of course, as and when they come back to life, the company will let us know about it. So firstly, to that gold project, the Gold Ridge project in Arizona consists of three historic mines: the Gold Ridge, Gold Prince, and the Dives mine, which are located on the southern end of the Dos Cabezas Mountains in Arizona, as I say, the strike area is some 1.8 kilometers by 5 kilometers in length. With the existing historic tailings, there are readings there of some 115 ounces per ton, or 3,900 grams per ton, which is incredible. I mean, that's almost like sort of picking up gold nuggets out of the tailings. Across the entire project, the average gold values are much lower, of course, between 0.05 and 6.5 grams per ton across all levels in all the mines. Bit of a step forward in May this year. SRK Exploration, of course, SRK are a team of geologists and experts who have a very good reputation in the market. So when they're commissioned to produce reports, they can give a very accurate assessment of the opportunity. And certainly when SRK reviewed the Gold Ridge project, they said there was certainly potential for discovery of further mineralization, recommended a two-stage work program, and said that the collated data from that may well confirm the presence of a bigger and more widespread gold system. And of course, if that is the case, then I think MNRG are really onto something there. But nonetheless, there is existing gold there. So, as I said, in a sense, it's the insurance for the company underlying everything going forward. We then come to the Brit NRG investment. This is at home in the UK, in Lincolnshire, where there are 3 producing licenses, producing oil at Wisby, Newton-on-Trent and Reepham. Wisby is the most active asset. The wells there are Wisby 4 is producing 55 barrels of oil per day. And Wisby 6 was recently returned to production. The company announced on June the 2nd, and that's now producing 50 barrels of oil per day. Now, the efforts here to bring everything back online have cost MNRG some 180,000, and the company said on June the 2nd it expects to receive payback in the first 3 months of production. So that's a pretty good return on investment in a very short space of time. Rolf Gerritsen said, I'll come on to the board in detail in a second, but Rolf Gerritsen, the CEO, said that the production from Wisby really baseline the group's financial position. So, of course, you've got gold, which is an asset underlying everything. You've then got the actual cash income coming from the oil production, and of course that will continue and expand as the group develops the Lincolnshire fields going forward. So the third arm, if you like, to the MNRG offering is, of course, in green energy, and to this end, it has embarked on its first investment joint venture with Ectech. Of course, we've spoken about Ectech beforehand, and this is on a waste to energy plant that burns straw pallets, wood chips, etc., biomass to generate energy. The MNRG announced on the 21st of June that the financials for the joint venture had been completed. MNRG now owns 26.6% of this asset, and it expects to generate from this annual revenues of some 2 million euros and EBITDA of 750,000 euros. So that's a pretty strong investment proposition. Within the agreement, Ectech has the option to, or has a call option to acquire some or all of the remaining equity back from MNRG. But of course, that's within the first 2 years. And again, MNRG and the other shareholders within the agreement have put options to offload some of the equity should they wish to do so. But certainly, a day or so after this, Rolf Gerritsen, the CEO, put his hand in his pocket and purchased just under 2.7 million shares, and then a further 900,000 shares shortly after that. So decent steps forward from the company in that regard. As I say, Rolf Gerritsen, the chief executive, is 55 years of age, 30 years experience. He speaks 4 languages, and he has experience working pretty well all around the world: Europe, USA, Africa, Australia, the Middle East, Far East, and South America. So he's got experience in every corner of the world, if you like. Chairman is Chris Campbell. He's a chartered accountant based in Zimbabwe, and is involved in coal bed methane projects there. And of course, a non-executive director on the board, very high-profile fellow, Christian Szelfalitsky, 40 years experience, known as heading up Eurasia Mining, but of course is also involved in Ivernia West, Kibo, and Blenheim Natural Resources. On the Brit NRG investment, that's headed up by Executive Director of Oil and Gas, Pier Paolo Rocco, who has a distinguished career in oil and gas with ENI and Shell, and of course is basically heading up the development of the Brit NRG projects. The company also, just back to Brit NRG a second, there are many of the wells that have been worked beforehand have been done so on should we say outdated methods. And what Pier Paolo has brought to the team is use of the very latest modern seismic and geology or methods employed by geologists today, which aren't currently being used. So it's hoped that with that they can identify further opportunities. Just a word on the indirect projects. There's a uranium project in Kyrgyzstan, which is very much dormant. There is a new government coming to power in Kyrgyzstan, and if there are damages paid, then to the holding company or the mining company Invest who own this asset, then MetalNRG will receive a shareholding equivalent. Their shareholding equivalent is 9.9%, but that's all dependent on what the government say there. There is also a dormant investment at Lake Victoria Gold in Tanzania, and the monies invested there previously by the group equate to some 3.8% of equity. But that's not to say that we're expecting anything there. But of course, if there is a development there, that brings a further asset into view for the investment proposition as a whole. Currently, the company has a market cap of just 4.5 million. So given that it's invested into a cash-producing asset, it's underscored by a gold asset, and has the near-term potential with the Italian joint venture with Ectech to see some of the incoming revenue from the waste energy plant. There's a very strong mix here of cash and investment potential upside going forward. The shares have, along with a lot of other stocks in the sector, drifted back over the summer, and we're now not far off year lows of 0.4p. So really, this is I would say this is one to buy and tuck away. But I think the next trading update from the company, if that shows that the company has generated decent cash from the Wisby well, and there are further developments with the assets in Italy, then I think we could well see the shares start to return to the year highs of 1.4p. So yeah, it's at a very good stage to get involved.
Yeah, I would agree. It does have a low market cap, and really, I think understand now what Rolf wants to achieve there at MNRG. He wants to invest in revenue generating assets, put some money into them, get them back up to steam, get them bringing in revenue, coming back to MetalNRG, and then recycling those funds into further projects. And of course, one is already revenue generating, of course, which is BritNRG, and there's still more upside there, I believe. And then EQTech, EQTech as well, that is coming on steam. I'm pretty sure it was quite early next year, wasn't it? I think.
It's about 8-9 months away.
Yeah, not so far away. Yeah. So yeah, I think it's a good value proposition, I think, at the moment, and really when something is generating revenue, that's obviously a big milestone point there, and then you can start to put a value on it, can't you? So I think when the next update comes out, yeah, you can really get a feel for. We can start to put a value on the individual projects, and BritNRG being the main one at the moment, and then you can kind of think, okay, BritNRG is worth X, then how can we attribute value then to the main MNRG group? But yeah, I think go on.
And of course, there is still that gold asset in the background as well. So that sits behind everything, I think. And whether the company decides to move that on at some point or decides to develop it with its own, and certainly the board of directors are well capable of bringing that project back online. So that's I think that's the potential. So there's a much broader scope of potential here than you would find, say, with a company that's operating one single mine. So that's the X factor here.
The X factor, yeah. Okay.
Yeah.
Good. Okay. Well, thank you. It's. I think it's one we can revisit, Alan. Maybe later in the year when we get an update from them and reassess. How it's gone from now until then, because it is a good opportunity now. I think, particularly when it's quiet, to perhaps consider accumulating a few. Okay, well, let's move on to the next company. That's Corcel PLC.
Okay, Corcel PLC. Again, a very similar concept. A company that has a range of assets, and on the website, the company says Corcel operates at the intersection of battery metals and their end case uses in energy storage, and of course the electric vehicle revolution. So to that end, we'll look at the battery metal assets first of all. Initially, we had the Mambari nickel cobalt asset. Now these are assets there are two assets in Papua New Guinea, but the Mambari nickel cobalt asset is 41% owned by Corcel, 59% owned by Battery Metals, and there's a JORC resource there of 162.5 million tons, and that tonnage is just under 1% nickel and just under 0.1%. Just under 10% nickel and just under 1% of cobalt. So that's basically 1.5 million tons of nickel right there. That's in eastern Papua New Guinea. These steps forward this year have been quite significant. In May, an environmental permit was granted by the government there to excavate the laterite ore deposit and develop the mine. And the asset is not inconsiderable, given that we've already gone through the hoops of getting the EP in place, and then we come to the second asset, which is the Burwell Gap asset, and here there's a slightly different setup. There is a debt position with the developer there, Resource Mining, and here the company's owed $4.76 million dollars. That's Australian dollars. JORC resource here of 125 million tons, 1% nickel, and 0.07% of cobalt. So the tonnage there is 1.3 million tons of nickel and 83,000 tons of cobalt. Now this is repayable within the next 12 months. So there is speculation here that given that the developer Resource Mining has acquired a nickel project in Africa, in Tanzania, there could be a project for debt swap taking place. No confirmation from the company on that front, I should stress that, but there is speculation that this could happen. The potential here was picked up. In fact, this was a week ago. Aligned Research issued a note for the company, an update on a previous note, and it said that Mambari could be a significant direct ore supplier, nickel supplier to China, and with the lease up in the next 4 to 6 months, we could see rapid progress there. So on the back of that, Corcel could be set to become a major nickel and cobalt play in the region, and of course its proximity to China would give it a fairly obvious market. So that's that's most of the asset base covered there. We then move across around the other side of the world to Canada, where we come to the vanadium asset, which is Dempster Vanadium. There's a 50% interest in vanadium-rich metalliferous, I got that right, block shales in North Yukon in Canada, sited alongside the Dempster Highway. So very accessible. No news on that since we last spoke about this, but the holding is there nonetheless. And then we come to really the core of what Corcel is about. And of course, when we spoke about these last, the company Mast Energy had just come to market with projects that were ready to go. And these are flexible power projects or flexible power assets which supply additional power to the grid and just fire remotely when they're required. obviously the way we consume electricity now is changing rapidly, and these flexible power solutions are in place to supply and or satisfy an increase or a surge in local or regional demand, and of course support the main grid if there is an outage in any way at all. So the Burwell project is set to energize in 2022, and this is a 100 megawatt connection at a substation in Cambridge. It's still some way away from production, but it's 50% of the asset there is battery based, and 50% of the asset is solar. So 50 megawatts battery, 50 megawatts solar. Comparisons have been made value-wise to the MasterNRG project, but the company has pushed ahead and made further acquisitions. In May this year, it announced it had acquired an asset at Tring Road in Aylesbury. That's a 50 megawatt flexible power project. Paid 150,000 in cash and 12 million shares, so 400,000 in total. And Scott Keynes, the CEO, at that point said it was a big milestone for Corcel, as it bolstered the position of the company in the flexible energy space. Then at the end of May, it took another step and it acquired 100% of the 100% exclusive rights over a shovel-ready site in Avonmouth, in Bristol, from FBC Electric Land, another 50 megawatt asset. So now the company has 200 megawatts of projects to be developed, and with the Avonmouth project comes a further 15 megawatts or rights over potential grid connections and land for a further 15 megawatts. And again, the terms here: £72,000 cash up front, 72,000 at financial close, plus a 30-year land agreement. Corcel said that it expects to take all three of these projects to financial close by the end of this year, and at the same time, it also appointed WH Ireland, well-regarded broker, as its nomad and sole broker. At the same time, Scott Keynes himself also acquired shares in the company, spent about 14,000 of his own money acquiring shares in the company, which is always a good sign. The most recent news on this is that, going back to my point earlier, that Align Research put out an addendum to their original buy note, repeated their commission buy rating with a 19 pence price target. Currently, Corcel is trading at 1.6p, has hit 2.5p, but it's the stock popped up again recently, and is now looks to be building a series of high lows on the chart. Align highlighted the additional projects that were set to come on stream in the flexible power space, and when compared to its peer group, and of course MasterNRG is very much included in this comparison, and compared to industry metrics, Align sees this huge upside, and I think we spoke about this before with Scott. Compared to the valuation that was attributed to MasterNRG, and Master is still trading strongly. It's currently 12p, giving it a valuation I think of about 23 million. So the comparison in terms of its peer group, Corcel seems to be massively undervalued, and of course it's not just flexible power; it also has the two nickel and cobalt assets in New Guinea. So I think we've got a very strong investment case. And again, a little like MetalNRG, it's that spread of assets, it's the spread of opportunity that the company offers, and also it's having that spread of assets within the company very much de-risks the overall investment proposition, in my view. And I think also, if you're an investor looking for returns, say, and you like the idea of investing into funds, you can look at companies like this almost as many funds, because most funds tend to invest in a spread of assets that offers upside and also some resilience in a downturn, given the spread of the assets, and also given the diversity of the assets. And I think both these companies offer those qualities. Certainly Corcel, I think we saw the share price sort of come off after the highs back in April this year. It slowly came back, touched on the lower high in July, and has come back very strongly since then. I think investors are seeing value in this now, and I think going forward, once we start to see news developing from any of these assets, particularly the flexible power assets, I think we're going to see some upward moves from the company before the end of the year.
Yes, indeed, and I think to quote, I think from James Parsons, the chairman, I think that's right, isn't it? Yes, he mentioned the rise of batteries, and I think that's a very important quote there, because it's batteries are going to be everywhere in the future. I mean, you'll have to look at battery technology and how it's developed over the years. I mean, I remember my model aircraft, and the kind of batteries we stick in them these days is incredible. The amount of power you can get into a small lithium battery. And I remember one morning my old Vauxhall Astra wouldn't start, and I didn't have a means of starting it. And I thought, you know what, I'm going to stick on my lithium 14-volt battery from my model aircraft, and I thought it won't work. It's turned it over immediately.
Goodness me!
Yeah, I know. I couldn't believe it. It fits in your pocket. I wouldn't recommend doing it all the time. They are very sensitive lithium batteries, but I was amazed it worked. And of course, it's just getting smaller and smaller and more compact. And I think that research note was amazing. What was it? It suggested like a 900% upside potential. Yeah, I mean, incredible, really. But you look at Corcel there, was it 6 million at the minute? About 6 million market cap. And if you just take into account, I think, the FGS stuff, that's very exciting. And then again, you can factor in the mines as well and the exploration plays they've got just to add on to that. But I think this FGS concept is a very interesting concept. And as you say, shovel ready. They'll be hopefully getting them online, fairly soon, and in the near term, not the long term. It takes a long time for a mine to come on stream, but you're talking maybe 6 to 24 months to get an FGS project into production, operational. And there you're going to get revenue coming in. And I think that's really the future of energy delivery, particularly in the UK, is this flexible grid solution concept. I think Corcel very, very well placed there across the whole of that battery energy metal space.
Absolutely, and of course you mentioned James Parsons there. James Parsons, of course, has a distinguished track record both as CEO and chairman across a number of companies, and prior to that, of course, he spent 12 years at Shell. Of course, Chief Exec Scott Kaintz, former US Air Force pilot, also an analyst when he left the Air Force. He's executive director at Curzon Energy, also a non-exec director at Andrew Bell's company, Red Rock, as well. So, a lot of experience there. But I think the flexible grid solutions space is a huge burgeoning opportunity in the UK, and Master Energy probably best epitomizes the value attributed to that with its very successful IPO early this year. But the other companies, I think, probably have been less obvious, and certainly Corcel came to investor attention back in April, and we saw the corresponding rise in the share price at that time. But I think the Align note is well worth reading. There's some detail in there. It just really lays out the investment proposition very clearly. And the simple fact is that it's compared to its peer group, and of course that peer group includes Master Energy, Corcel is massively undervalued, and this was something we said back in April, and certainly the development since then. They had just the Burwell asset then when we spoke back then, and of course since then they've acquired 2 more, so they've doubled the capacity. Tring Road, Aylesbury, and the Evermouth project have brought that up to 200 megawatts, and certainly I don't see the company slowing down. I expect further acquisitions, but we'll also have further news on just how quickly these assets will be literally and metaphorically plugged into the grid later this year.
Later this year, indeed. Okay, excellent. Well, thank you very much again, Alan, for your time talking to us there about the investment case for both MetalNRG and Corcel PLC. Thank you very much, and we'll speak again in a week's time.
Thank you, Mark.
Thank you for listening to this Stockbox interview. For more information, interviews and videos, visit our website at stockboxmedia.com or give us a follow on Twitter by searching @StockboxMedia.